And the end of that music and all of those legal words means it's time for another edition of Trade Masters. In all sincerity, I love this show. And I love this show because these market conditions haven't been easy, but even if they are easy, like they have been, we've been doing this 4 or 5 months now. I get two traders to come midweek and give me picks to evaluate. And that I have done some of these trades and I've been very, very happy with the results. But like the week gets so busy, and to have two expert traders come and bring 5 picks each, and we have a little fun with the contest, and someone is declared winner at the end. But I love the information, and I got 2 good ones tonight. I got defending champ returning, our friend from Canada. Why do I always have to say that? The friend from Canada. Greg Holmes. How you doing tonight, Greg?
I'm doing just fantastic. Thanks for asking.
And Tyler Craig joining us, no stranger to tackle trading community. Won this many times, so this little show tonight. Tyler, are you ready to get your belt back? Are you ready to get in the chair again?
Listen, I looked at a lot of stocks. If Greg beats me after me looking through tons and tons of stocks and finding these, then he deserves it. But I don't think he's going to.
I only looked at 5 stocks and I just went, yeah, those are good enough to beat Tyler, so don't even worry about it.
All right, well, listen, I want some picks. I got my pen, I got my paper, I got my notes just ready for my own evaluation to look at the charts later tonight after you guys get done. But Greg, as defending champ, you get to decide who goes first.
I will defer to the challenger.
Tyler, what you got for us? Round 1, let's do this.
All right, I'm going to build, we're going to start with tech. So I've been gone, for those that don't, follow my daily calendar. I've been gone for a bit, got back into town, very pleased with what's been going on with the market. I like the reawakening in tech stocks. Got a little ahead of themselves. We've had a lot of green bars in a row. Today was a down bar. So I was like, okay, I think we've got strength in tech. We got a little bit of weakness here recently in terms of today. I wanted to see if there was a decent buy the dip setup in the tech space. And the reality is there aren't many, because we only have 1 down day after a pretty big advance. You'll get more if you get a couple of down days. And this may have been in the scouting report meeting, and on the scouting report, I don't know, because I wasn't paying attention, I wasn't here. But I have found what I think is the best bull retracement that you can find in all of tech, and that is AMAT, Applied Materials. There's a couple reasons why I like this. On top of the fact that tech is just doing well right now, semiconductors have awoken. Many semiconductors are trying to bottom. You've had strength in Texas or Taiwan semiconductors. For instance, you've also had strength in Intel and Qualcomm and some of these other ones trying to bottom. But AMAT is really the strongest, I think, in the entire space. It also has time between now and earnings. So there's a lot of these that have earnings pretty close. This one gives you a little bit of time to play it before that. I really like the strength of its last advance. When this broke out a couple of weeks ago, you saw big volume coming in. You saw really good upside. And since peaking at 146, you've got a nice, clean, orderly retracement down towards that rising 20-day moving average. You've seen volume recede, so you don't have a lot of aggression on the sell side over the past few trading sessions. This, to me, is a pretty good looking dip. So I need confirmation. I need this to get above a prior day's high. Tried to do it today, but today was a tough day with tech being as weak as it was. So I'm watching this in the next day or two. I would trade it tomorrow if it takes out today's high. From a strategy perspective, the way that I'm looking at this, so implied volatility, I think, won't go that much lower in the near term because it's got earnings coming around the corner. And right now it's relatively low with the 24th percentile. So I would rather buy options here than sell them. And at 134 bucks, I want to do just a nice, simple, balanced risk reward, bull call vertical spread. Look at it just buying the 135 call option, basically the at the money, and selling the 145, which is right around the prior pivot high. Doing that for May. Doing a front month here. So I'm going to get relatively quick resolution. If you take a look at the pricing on this, using the May monthlies that expire on the 21st, buying again the 135 call, which, you know, $7, $700, that's going to put you out a little bit, but you sell the higher strike against it, cuts the cost to below $4. So you're risking almost 4 to make 6, gives you a nice 150% potential ROI. And if it just gets up to the prior pivot, that 145, 146, getting about a 50% return today. If you wait till expiration, it'll expand to a much bigger return. But I like the straightforward nature, the simple nature of just a bull call spread on this bull retracement.
No, I like the pick. I like the pick. You know, and when you have 1 day sell-offs like you mentioned in tech, if the sell-off in tech gets more advanced in the coming days, there can be different setups, right? You know, maybe you get something juicy in an Apple or a Facebook or a Microsoft, who knows? I'm sorry, I just buy the cyclical theme. I like semiconductors the best this year in the tech space. So you had me at hello. Interesting fact, I was looking it up on the chart. AMAT has stayed above the 9 weekly since the first week of November when it broke out of that pattern.
Yeah.
And you get dinged a point for not having my girlfriend, the 9 on the on the chart coming in. There you go, Mark's girlfriend right there. Stayed above it for a good stretch. I mean, every time it's came down, it's bounced. Every time it's came down, it's bounced. So I even like a deeper pullback. If you were to pull back to the 9, it would ruin the particular strategy you were looking at. But if for some reason the tech sell-off accelerates and it pulls back even more, there could be some opportunity, and that's lining up with the old breakout level. There might be something there. All right, not too shabby there, Tyler, but I'd expect nothing else. Greg, what do you got for us, round 1?
All right, well, in honor of Tyler's bull call, I'm going to do one of those as well. Can you fire up CI for me there, Tyler, please? All right, so classic breakout at 250. Popped today, pulled back slightly at the end of the day, but this is a breakout. It did close above the level that I expected it to. High base, moving well. Longer term trend looks good. This is just your run-of-the-mill breakout as far as I'm concerned. You've got better than 3 weeks of sideways action there. You've got lots of time to build up some energy. Weekly it looks just as good, if not better. Just a simple high base pattern. Really nothing to worry about. You've got time between now and earnings. Okay, there is it's May, I believe, May 7th that your earnings is. So that's still 3 weeks out. Actually, maybe even about 3 weeks out. So you got time for that. Just a regular May 28th, 250, 260 bull call.
Will you go back 1 second on that, Tyler? Go back to the chart. We go to a monthly chart. I love that consolidation pattern that lasted 3 years?
It's a long time.
I mean, and so like when you think about missing breakouts, that's a 3-year breakout on a consolidation pattern that just as recently in the last 5-6 weeks broken out of that, and then consolidated by itself again.
Yeah.
All right, how would you play it? Because I love that situation.
Yeah, like I said, this just screams. So it's got the implied volatility is quite low. So I think you got to go debit here. Like I said, I looked at the May 28th, so the weeklies, 44 days out. Obviously, you've got earnings coming, so you don't need to go out that far. Chances are you're not going to ride this through earnings anyway. I looked at how many candles, like how quick the move is. So I think 44 days is fine. Your theta is not going to be too much of a drain on it. Like I said, it's already broken out, just giving you that confirmation. So I was looking at the May 28th, 250. So buy the 250 and sell the 260. So you're looking at 365 for 10 wide. So you're almost 2 to 1 there when it comes to the ultimate target for it. So
all right. So help me out, both of you here. So like when I see a consolidation pattern, because there's obviously a short-term trade there, right? But when I see a breakout of that many years, and then you get a pretty pattern like that, how would you play this longer term? Like how far out? Like let's say I wanted to do a longer term position trade with a bull call spread. How far out in time would you go? And that is a genuine question I have because I might do that. So how far out in time would you go?
If I were playing this as a position trade, I'd be doing it as a diagonal myself.
Okay.
I'd want to jump in on the straight option and then sell. I actually would probably just leave it as the straight option as it moved. And then once it started to retrace it all, that's when I would throw on my short and then just kind of do double rolls as it kept moving up. That's how I would play it anyways.
How would you play it, Tyler, as a position trade?
Yeah, that's an interesting idea, Greg. I like that. If I were sticking with the bull call, which my challenge with going with the straight long call longer term is it's going to be relatively expensive. So I think it just comes down to how much money do you want to allocate to this. Cygnus $250. If you're buying a longer term call, it's going to cost you a pretty penny, which is fine if you have the right account size for it. But if you wanted it cheaper, Mark, I don't know that I'd go any longer than October. That gives you a good 6 months. So I'd probably do October, and then you could do a little wider than a $10 spread since you got so much time. So maybe just buy the 250, sell the 280. Do a nice little $30 spread for 1180. You could shift it higher or lower or shrink the spread width if you wanted to, but I think October would be the month I'd anchor on.
All right, beautiful chart. Greg, what would be your specific trigger to get into this trade?
Above the high today. Like it's above that 250 mark, and that's really what I wanted it to be. So if it gets above the high tomorrow at 250.32, I'm in. Because like I said, it really broke if you look at where that line is that Tyler drew, it broke today. Like it's broken out. It closed above, basically the tops of those other candles there. As far as I'm concerned, it's a breakout, and it's, you get above that 250 psychological level. Like I said, I'm in for that.
Listen, you don't get many month-long consolidation patterns following multi-year consolidation pattern. You don't see this chart set up every day. I really, really like it a lot. Now, Greg, you're going to bring jokes at the end of every round today. You're going to have to give me a really good joke to like as much as I liked the chart setup.
Okay, I'll do my best here, buddy. A man comes to Mrs. Smith's door and says, "There's been an accident at the brewery. Your husband fell into a vat of beer and drowned." Mrs. Smith wails, "Oh, the poor man, he never had a chance." The man says, "I don't know about that. He got out 3 times to go to the bathroom."
All right, it wasn't too shabby. All right, I loved round one. That was expertise. So many people out there, they smashed the buy button. I've read so many message boards in the last month. People dismayed because their stocks aren't working out because it's not working out from them. Listen, education is key. Having the right community is key. Having information is key. And speaking of information, if you want those news headlines, the stories every day that are moving the market. If you don't want to spend hours watching the news and just want to take a few minutes, check out the Huddle on tackletrading.com. It's a free product where Matt and Tim break down the top 5 news stories of every day. Check it out, the Huddle on tackletrading.com. All right, that was a great round one. Round two, let's see what we got. Tyler, go ahead.
All right, I'm moving into financials. We had a bunch of bank earnings today. And if you look at the performance, JP Morgan, ended down 2%, a ways from a breakout. Goldman had killer earnings. Not in love with the upper wick on today's bar, though I did like that pattern. The one, though, that I'm going to go with that I think really stood out when you compare it to what happened to Goldman and JP Morgan is Wells Fargo. Just look, the market sold off a little bit at the end of the day. Small caps came back. Goldman Sachs came back from its high, but Wells Fargo did not. I think there's a tell there. I really like this breakout. I love today's candlestick. I love the volume on this. And Wells Fargo has quite a bit of room to run if it's going to catch up with the rest of the space. This has not recovered near as well as the Goldmans and JP Morgans of the world, but it's got room. It just took out a weekly resistance level as well as the daily. It's got room up to about $45, $46. Gives me about 10% of upside on the daily chart. And so I just think that this earnings announcement, this positive fundamental the backdrop for the company will continue to propel it higher throughout the quarter. So I want to position myself bullish. This is more of a position trading stock for me than a swing trading stock. You couple that with its cheaper price, 42 bucks, and its lower implied volatility, which has now tanked after earnings. You're at the lowest level with respect to option prices that you've seen in the last year. So I want to be buying options. I like a bull call diagonal spread with Wells Fargo here. Buying a little bit longer term in the money call, selling a short term out of the money call against it. You can create some really fantastic potential returns with that particular trade structure right now. So what I'm going to do here, Mark, is I'm going to go buy just a June, going to buy a 2-month in the money call option, the 40 strike price. And then I'm going to sell the May 44 strike price against it. So structurally here, I'm buying 2-month in the money call, selling a 1-month out of the money call. Ideally, this thing keeps trekking higher towards 44 over the next month. It's a really cheap trade. So if you take a look, June, buying the 40 call, paying about $3. It's got about a 70 delta. And then May, this is going to create a risk graph kind of like a covered call. So I'm going to sell the May. I said 44. I should have said 45. Actually, no, it is 44. Here's the wrinkle on this one. Because the delta available in the front month goes from a 45 delta, which I think is too high, too close to the money, jumps all the way to a 22 delta, and there's not a whole lot of premium. I was really hoping to get something in between. And so this is the exact scenario that I personally will then pivot to a weekly option and see if there's something in between the strikes available on the monthly. So I'm actually going to go to I think I did let's try the 30-day, the 30 calendar days. You take a look, you can see you got a lot more deltas to choose from. Liquidity also is not bad. So I don't, not taking a big hit on the liquidity side, but looking to sell the 44 strike, it gets me almost a 30 delta, bringing in a little bit more than had I stuck with that monthly option. So anyways, May 14th, 44 strike call, selling that. Net cost is going to be about $2.50. If I analyze this risk graph, it is a very good proxy for a covered call, but you're paying a very low price. Potential return on this upwards of 150, 170 bucks, which is over 50%. All Wells Fargo needs to do is head up to 44 bucks, which is $2 away. Definitely doable in the next month.
I love everything about that. I loved your analysis on Wells Fargo, how a little bit of tail strong. Listen, I'm a huge fan of banks this year too. So even if you wanted to do a longer term investment trade or something like this, I just love banks. I've loved them all year. I continue to love the story. So yeah, I love it. And I love how you're playing this too. Cheap risk, take advantage of upward movement. Everything about that I like. About that I like. My cat actually liked it too, Tyler. So you got an extra point for that because she came up as soon as you started talking about Wells Fargo. So love it. I mean, this is great. This is great tonight. This is what I needed. This is what many traders needed. Great picks, great analysis. Greg, keep it up. Round 2. Let's do it. You're on mute.
All right, hopefully I can deliver you guys a good pick here. Let's go to Fedex.
Ooh.
All right, Fedex. So really nice, intermediate to short-term trend here. Just rocking these higher highs, higher lows. Got a little pullback, 2-day pullback here. We could even probably get a 3rd day pullback here. But if we look at kind of the recent history, this thing gets about 2 or 3 days, and then it just rockets higher again. So I'm fully expecting this to continue in that vein. Earnings was just, what was that? I can't see it from there. Was that the 18th of March? So we've got until, I believe, March, April, May, June. So June is before our next earnings. So what I like here, you could have played a breakout had it not pulled back the last 2 days. Because it's pulling back again, I don't expect a deep pullback here. But what I like about this is a credit spread here. I can get enough premium out of this. Like I said, I still believe that even with the pullback, we're still solid here. The volume doesn't scare me away. The fact is we got a boatload of time between now and earnings, so I'm not really concerned about the implied volatility issue either. With this one here, I like a May 21st, sell the 270, buy the 260 bull put spread. So you've got lots of air between you and the short strike price. And if you look at the credit, we're getting over 10%. We're actually getting about 13% if you get the 131 debit. Now, even if you don't get that, which I don't know that you will, it's a little bit wide right now because it's after hours. But even if you got $1.20, $1.15, you're still well beyond that 10% threshold. You've got a boatload. You get $17 worth of cushion here. I don't know what the ATR is on that, but you've got a lot of levels of support there. You've got some moving averages that you're below. Just a nice little setup here. And again, like I said, earnings is not an issue, so I'm unconcerned. I realize that the implied volatility is currently low. But really, if we look across the board with everything, the implied volatility is low. Even if you look at the VIX, it's all low right now. I still like these credit setups. I'm still looking for this cash flow, and this to me is a beautiful setup for strictly 30 days worth of cash flow. So.
No, I like your use of strategy here, and you know it's above the 9 weekly after its little breakout that it had. It started March. It's been riding short-term moving averages on longer thing. So there's multiple levels of support here in a variety of ways, right? In a variety of ways. So you know, that 50-day, I think that blue line's your 50. Is that right, Tyler?
Yeah.
It will curve up and be there before your expiration as well to give you even an additional friend. So I really like your choice of strategy here, going for the credit on Fedex. Really, really, really solid. You had a great joke first round. Let's see how you do this time, Greg. As the official bringer of jokes.
All right. This one's a little bit longer, but I still think it's funny. Father buys a lie detector that makes a loud beep whenever somebody tells a lie. Son comes home in the afternoon. Father asks him, "So, you were at school today, right?" Son says, "Yeah." Detector goes, "Beep." Son says, Okay, I was at the movie." Detector goes, "Beep." "All right, I went for a beer with my friends." Father says, "What? At your age, I wouldn't touch alcohol." Beep, 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 beep.
You gotta say what you gotta say as a parent, right? You gotta say is what you gotta say. All right, this has been great start. Round 3, Tyler. Let's bring it.
All right, let's go to energy. I like that pop today in crude oil. Energy stocks making a bit of a comeback. Here's the breakout in crude oil. So I went fishing in the energy sector. When you take a look at the sector, it needs a little bit of work to give us a breakout, but you could see that you have a nice little base forming here. And longer term, energy stocks still look pretty good. We highlighted Exxon in the halftime report, so I wanted to find a different one. Went through every major pick in the space, and my favorite one is Suncor. SU is the ticker. Like this for a couple of reasons. So for starters, if you take a look at it on the weekly chart, you could see that we have eclipsed, the prior pivot highs here that kind of put a lid on the stock post-pandemic. Made a higher high, new 52-week high a couple of weeks ago. We got just a nice little bull retracement. If I were to pull up the 90 MA, we're probably sitting right on top of it. So I like the bull retracement on the weekly. I like the fact that you really don't have much till $25. You'll fill the gap from during the March plunge last year. So you got room up to $25 on the weekly. You take a look at the daily, and you can see that this paused for the last couple of weeks. 50-day moving average played catch up. I really like today's bar. Good volume, really nice bullish candlestick. Pushes this right up to potential overhead resistance around 2160. So trigger is going to be over today's high. First target 2369. Second target's that $25 off of the weekly resistance. So the other thing I really like about this is the cheapness of the price. Only $21. You could do a little stock trade here if you wanted to. The options are relatively cheap, and you can get a pretty good ROI with a bull call vertical spread is what I was looking at. I was looking at buying the June 22 strike call. So buying an at the money for June. I like the more directional play on this just because I feel like when you've caught breakouts in the past on Suncor, it's paid to do a little bit more aggressive directional trade. So buying the 22 strike for June, selling the 25. So going out a couple of months. That stock or that option trade cost should be pretty good here. So buck 15 or so for the long call. And then I'm going to cut my cost by a good 35 cents. So paying 80 cents for $3 spread, which means you've got a lot of potential upside if this thing takes off. So given the cheapness of the trade, I don't think you technically need a stop loss, although you could just use the low of the base, which was just the low of the last couple of weeks. And I think you got a pretty good risk reward with this.
No, and buying shares. I think Greg brought up Suncor here on the Trade Masters 5, 6, 7 weeks ago on a breakout that I played based on Greg bringing it treated me well. You know, I like stocks. Like, I love this trade setup, by the way, and I love the space. And will you go to crude oil real quick?
Yep.
You know, and crude oil broke out of its little range today. You know, which if crude can get some momentum, you know, and you know that's an if, right? That's an if. But I mean, it's just going to carry energy with it most likely. So like the trade a lot, like the cheap risk. I also just like buying shares, you know,
Yeah,
on that. So solid as can be. All right, Greg, this is a heavyweight fight here. Great pick after great pick after great pick after great pick. What's up next?
All right. Well, I did a little talk about this on the coach's show last night. The pros and cons of earnings, right? So right now we're just starting. The banks are first to produce their earning reports, and so there's people who love to trade through earnings. There's those cowboys, and you know the people who are more aggressive, and then there's those folks who want nothing to do with it. Well, I've got a pick for those folks that want nothing to do with it. Let's look at FXE. So going straight to an ETF here, just, you know what, no worries about earnings, implied volatility is not an issue. You know, this thing's making a little cup and handle action here, simple little breakout trade. The part that I like most about this is we're right at that 50, so we're looking to get above that for a trigger, which it's right, like literally sitting on there, which also happens to be a level of resistance there as well. You know, a formidable resistance as Tyler just drew there. So looking for the euro currency to jump. And if we can go to the trade tab, this is the part I like the best. This is a nice, cheap trade. I believe I was looking at I didn't write it down here. Let's look at the May 28th. Let's go shorter term here for a second. No, I went out further. Sorry. Let's go to the June there for me, Ty. And go right to the at the money. Yeah, so there we are. So the at the money call option, the 112 call option, you can buy one of those things for so you're slightly in the money there. You can buy one of those things for $1.20. You know, so $120 risk. My target for this thing, I believe it can get up to around 115-ish. So if you look at that on a risk graph, right? So if you see that big red candle up there, you look at this on a risk graph. So you're betting $1.20, and that's if you don't use a stop. Okay. And if you get up to the 115, so you're risking $1.20. And slide that.
I get that, Greg. 1 sec. There we go.
Yeah, you're the best, buddy. So you're looking at almost 200 there. So you're risking $1.20 to get 200, and that's assuming that you just let it ride. Obviously, you could use a stop loss below, below one of the candles or whatever. But I just love the risk reward setup. It's cheap, so even folks with a small account, you know, $1.20 is not a lot to risk. Much like Tyler showed in the last one as well. So no earnings issues, no implied volatility issues. A stock that's setting up technically, it looks real good. That's just getting above that 50. Bob's your uncle. Like I said, 115 is where I see that getting to. If it got past that that red candle there, that old pivot, if it got past that, then 116 and beyond. So there's potential for even more there.
I'm just thinking, I'm looking at different things. Whenever I have a trading instrument that I don't trade, right? It's always fascinating to me. I feel like I'm being exposed to something brand new. That's a nice triple bottom that it's formed over the last 6 months, right?
Mm-hmm.
And I'm trying to look at the moves it's made off of support.
The other part of this that I didn't mention is obviously weakness in the U.S. dollar.
Well, I was going to say, basically, this is if the dollar tanks.
This is a
This is going to run if the dollar tanks. Will you pull up UUP for me real quick? Well, dollar can tank.
Yeah. See, it's sitting right on the 50. So if it drops below the 50 and XFE goes above the 50, like I said, you can get a run out of that. And for the cheapness of the trade, right, it's hard to beat.
Would you wait for the dollar to go below its current support levels?
Well, the beauty of it is they run kind of opposite to one another. So if you get it to go above this 50 here, so it actually popped
Fair enough.
above.
Yeah, you could
It
use
popped
the
above
signal
there today, right? And so again, get in above the high of this because that would be above that 50 again. So it basically got above the 50 and then just came and settled at exactly that 50 at the end of the day here. So like I said, in above the high here, and I think what you see is you see this run and you see the dollar will follow suit in the opposite direction. So.
All right. I see. This is what I love. I can go home. Well, I am home, but later tonight, watch TV, drink a beer, look at these different trade setups, think about it. And I love that you gave me something to think about tonight, Greg. Now, am I going to remember your joke tonight that you give me right now?
I'll see. This is a different one, but anyway, as a Russian prepares to cross the Ukrainian border, the border guard asks, "Occupation?" "No," says the Russian, "just visiting."
Say that again.
All right. As a Russian prepares to cross the Ukrainian border, the border guard asks, "Occupation?" "No," says the Russian, "just visiting."
Okay, I get it.
I like that joke a lot. Hey, listen, geopolitical jokes at their finest right there. I like that one a lot.
That took a second pass, Greg. That took a second
pass.
That's
okay.
I was a thinker.
That's a joke grenade, right? You got to throw it and it takes a minute or two.
I like that one a lot. All right. I've loved tonight. Seriously. I mean, this is amazing. Seriously, I needed this tonight. I needed some great picks, and I have not been disappointed. Round 4, Tyler, keep it up. Let's do it.
All right. I'm going to go back to tech, actually, and this one is going to be a stock trade. Lattice Semiconductor, LSCC. First of all, take a look at the weekly chart. This thing was like $5 a couple years ago, now sitting at 50. And volatility's picked up a little bit, but compared to what happened in the semiconductor industry, compared to the depth of the retracement in the NASDAQ, I really like how well this is held up. And it is itching for a breakout over $51.50. You take a look at the daily chart, and you've got really a very uncommon, I think, variant of a double bottom or a W pattern. Like that is legit a W. And I like the little base going on over the last couple of trading sessions. So this you can call a high base breakout over 51.50. The volume patterns are also really lending a hand to bulls here. The pop off the lows had really good accumulation. And you've had really no selling pressure over the last 2 weeks. Volume's been muted. I think it's just a matter of time before this pops above 51.50. So trigger over the high. In fact, shoot, if you're looking at just this base, I think you could trigger over $51. Forget the 50 cents. Stop the low of the base. You're risking $2.50. I think $55, $56 is a pretty easy target. The options are not great on LSCC, so no fancy really fancy thought needed here. I think it's just a straight high base breakout trade. Buy the stock, put your stop in, and let it ride. Let it ride.
I mean, it's beautiful. It's quality. I love how you pointed out the W pattern. And I mean, listen, there's been a lot of weird price movement in different areas of the market the last couple months. But it stuck those support level. I mean, it stuck that last support level and was just volume pattern, everything. But I don't have anything to add just other than to say, well done. Love it. I really do. Greg.
All right.
Bring in the heat.
All right. Let's go to Lulu. Everybody's favorite retail. All right. This one's pretty basic too. We've got a reversal happening here. Lulu's kind of took it on the chin there, basically from, December, kind of, actually mid-January, right up until just recently. High based out, reversed, kind of the classic reversal, from that downtrend line there, working its way higher. And now we're sitting at this precipice here. Thank you, Tyler. With a little high base action going on here, just sliding sideways today. I fully expect that we're going to see a little break above this as well. We're above that 50. It's starting. What I like about it is if you look at the 20, it's already curled to the upside. The 50 is starting to do the same thing. That's what we want to see. Once we get this current break, you'll see that 50 will curl to the upside. So then we'll have the moving averages moving in the right direction, which is what we want. We're early in this overall reversal, right? So we can get in here and still have a lot of upside to this. What I liked here, it's a bit high dollar, but I think the setup warrants kind of this play. So what I was looking at was a May 28th bull call, looking to get in at the 325 to the 340. So I fully expect that we get to 340 pretty easily. Longer term, you've got some more levels up here, 360, 380. So you've really got a lot of room to go here. But if we look at the trade tab there, like I said, May 28th there, Tyler, 44 days. And if you buy the 325 and you sell the 340, so you're looking at about 500 there, 5.5. For a $15 wide spread there, so you've got way more than 2-to-1, which is nice. That's just the way I say. Well, not way more than 2-to-1, almost 2-to-1, I should say. Just an easy bull call. And again, the key to this one that I really like is that 340 is just kind of the first target. If this thing decides to run, this is one where if it hits that 340, then you roll this up to the next levels. Right? Take a little bit of profit off the table, roll it up to the 360, where would be the next resistance level. And then if it hits that, roll it up to the 380. So you've got a potential here to go further on this. Obviously, if you're going to do this, when I say roll, you're going to close the original trade and open a new one. You're going to give yourself more time as well, because obviously it took a while to get down to here. It's going to take a while to get back up. But I like the rolling feature of rolling potential, I should say, of this particular trade.
No, and one thing, and the only question I'm thinking for my personal trading is I don't know if I want to do something short term, because reversal patterns off support can grind sometimes. But I do love the general. I mean, when you got a company as popular and as big as Lulu that's coming off support levels on a multi-month consolidation pattern. I mean, how many times have I on Lowe's or Home Depot or Johnson & Johnson, so many of these Apple, or gosh, there's been so many great companies with multi-month consolidation patterns. And I'm like, why didn't I play that coming off the support level? Why didn't I play that? Well, you are coming off that support level here, and you're not too late on that. So I'm going to digest this one on how I want to play it. But I do like the general pattern quite a bit. I just don't know how I'm going to play it. And I don't know if I'm going to remember. I've loved your jokes, Greg. I've loved your picks. I've loved your jokes tonight.
All right, you ready for another one?
Oh my gosh, I could just sit here and just listen to jokes. Like,
all right, well, this one will probably get a groan from the audience, but I'm okay with that. Maybe just a groan from Tim Justice. But anyway, guys.
So listen, if you go get a drink for 60 seconds, all right.
It's
now I'm
it's still
scared.
it's still PG. Don't worry, it's still
Okay,
PG.
okay.
But all right, guy goes in the doctor's office, and the doctor says, "I'm sorry, but you suffer for a terminal illness, and you have only 10 to live." And the patient goes, "What do you mean? 10 what? Months? Weeks?" Doctor says, 9. See, Tim would have lost his mind with that one. That was a little dark, I know. But
Listen, I appreciate dark humor. I appreciate great picks. I appreciate you coaches. And seriously, like, what will separate good traders? Because the last year of trading has been really, really easy as a huge hole. A lot of new traders are already quitting. And the reason they're quitting is because they didn't understand why they were making money in the first place. So they didn't understand why they're losing money now. You want to find a community. You really do. Now, maybe tackle trading is for you. Maybe it's not. But I love the members in our community. I love the coaches. And more importantly, I trust the coaches because they have been not just fly by the night, just come. These individuals, Tyler, Greg, Gino, Tim, Matt, Frank, these coaches have been doing this, and I can verify, promise you, I've been seeing it with my own eyes for at least 15 years. They've been doing it a long, long time, each and every one of them. So whether it is tackle trading or not, find a community to be part of. Bond, help, grow, educate each other. And trading wasn't meant to be a solo sport. And if you want to see if this community is for you, check out the store tab on tackletrading.com. There is a place to sign up for a free 15-day trial. Check that out. See if this community is part of you. I know it's part of me. I'm going to be here like until I kick the bucket, until the doctor tells me 8, 7. All right, listen, this is close. This is close. There's a good pick. There's some diverse picks. Last round, bring your best. Tyler, go.
All right, I'm going to the retail space. We all know that the retail's been part of the reopening play. A lot of retail companies have been doing hot. This one I like a lot. Target, TGT. A couple things I like about this. First of all, this got smoked during its earnings announcement back in March. Just shellacked. And look at how well it's bounced back from that, right? Sellers washed out very quickly. Buyers emerged. You had some pretty good accumulation on the recovery, showing that institutions were returning. And it's been very well behaved. If you look at its history over the past month, you can see how well breakout trades have performed. Every time this pauses and breaks, you've seen nice upside follow through. And we now have a clean high base pattern. 3, 4, 5, 6, 7, 7 bars sideways after a nice little pop. Volume has been minimal during the consolidation. Seems like there's no interest in selling. I like how well, at the risk of reading too much into noise, I like how well this held up today. Closed at the high of the day with a nice little bullish candlestick. Looking for just an upside breakout over the high 207.38. Let's see, earnings April, May, June. You don't have earnings till June, so plenty of time to do a play. Mark, I like just about anything on this pattern. I think you can take your pick. I think you can buy the stock on a little breakout, do a little swing trade. I think you could do a bull call spread if you want to have, a nice little double your money chance. I even think you could do a bull put. The IV is actually high enough, all things considered. This is actually one of the higher IV earnings I've seen outside of earnings. So I'm happy to build any one of those trades. I just like the setup, and I think it's just a matter of preference in terms of how you play it.
I like this setup so much. I'm surprised you saved it for last. I'm surprised.
I'm a patient man, Mark. I'm a patient man.
It's like, because I mean, I like it. Listen, I'm a big fan of I'm sorry, Tech's recent run notwithstanding. I like the cyclical plays the rest of the year. I really do. I think the economy's going to reopen. I think it's going to be overheated. And I don't think market participants are going to be able to ignore that. And I like your tech plays are in the semiconductor space, that are traditionally do well in that environment. Old Target. But, I could go on and on about theme. That's just a pretty chart setup. That's just a pretty chart setup.
You know, the other thing I can mention too is you are seeing a change in behavior where post November, you know, through January, you were seeing these rolling swings in target, right? Deeper pullback, nice advance, deeper pullback, nice advance. Seems like turned a corner here the last month where they're not letting it pull back. You're seeing much more aggression, hardly any selling pressure after these rallies. I think that bodes well. I think that bodes well.
Yeah, especially for a short-term play. I mean, I like it a lot. You know, I like it a lot. Greg, all right, last round.
All right,
last joke, last round.
All right, I'm going back to the well for those folks who are not fond of earnings. Let's go to XLB, please. Basic materials. So this thing is easy to see. Stair stepping higher. Love the setup here. Again, this is just one of your technical setups, similar to what Tyler just went through. Lower dollar cost, obviously. I like the breakout of 81 there, which happened today. I think you get in above the high of this thing. You know, just you can't argue with it. You look at Tyler's got a 1-year chart on here. If you look from left to right, this thing's just been a juggernaut. Like it's just going, right? So lots of ways to play this. The one I like right off the bat for a quick little swing trade. Again, no earnings, don't need to worry about it. So that's not even a concern. I like a bull call vertical here. You know, just kind of a quick hitter. Let's see what I had down here. So June, if we go out to June, if we buy the 81 in June and we sell the 86, so we're going $5 wide. So now what you'll notice here is the bid-ask spreads on this thing are kind of goofy right now. Those will tighten up during the day. If you look at the volume and open interest, there is plenty of volume and open interest on these particular equities here. Okay, so that's not really a big concern there. I know it kind of looks weird, but if you look at it, you've got thousands of contracts depending on the strikes you're using. So again, this one here, you're in there cheap, right? You're in there for a pretty small debit. Now the reality is you're not going to get that for 46 cents. That's not going to happen. But even with a $5 wide here, even if you paid up to $2, right, $1.50, $2, and kind of split that there, you'd still be well within a good risk reward setup there. So like I said, this will change tomorrow. These will tighten up obviously during the day. I just like this setup. I like the breakout of 81. It's already done it once, so you get in above that 81.05 that it hit. And like I said, no earnings issues. You know, you do have a little bit more implied volatility with this one, but you could just let it ride. And the other way to play this, if you weren't fond of the bull call there, is a diagonal. I would be more than happy if you look at what this has done in the last year and kind of the strength that it shows. Even when it does retrace, it tends to pick up again. I'd be happy with buying a long call, selling one, you know, buy it, you know, 3 or 4 months out, sell a 1 month long call, get yourself a diagonal here and set yourself up for a continued run in basic materials.
Yeah, I mean, some of these ETFs that are based on industries or sectors, they don't always give you the cleanest chart. But, you know, when you look at the totality of trend, and we follow XLB, the materials, it's been a juggernaut and it's been steady. It has been really, really, really steady, and it's got the theme to back it up. So however you want to play it, I mean, I think there's opportunities there in the materials. I mean, there just are. I mean, it's just been you get a big dip. Well, go look at any big dip you've had in the last year, buy it up.
Yeah.
And I think that will remain. Look at any breakout you've had in the last year, you know, it's generally done pretty good. So I think it's a good space. I think it's a good pick. All right. Last joke. Give us something to remember.
This is I'm going to get you to choose there, Mark. So do you want dark or do you want an animal joke?
I feel like I'm in a choose your own adventure novel
Book
right
there,
now. Yeah. I've been in such a good mood from this show. I seriously, and I'll talk about how good a mood I am here in a second. Give me an animal joke. I'm a critter fan. Give me an animal joke.
All right.
Now, if the critter, any harm comes to this critter,
Oh,
Tyler's
no,
going to win the show.
It's not dark. It's like, that's why I gave you the choice of the dark one or the animal one. So, what makes fat male penguins such a hit with penguin females? They sure know how to break the ice.
I don't think it needed a punchline. I just think fat male penguins is pretty good. Listen, this seriously, like if you're new to trading, you probably don't understand how awesome tonight was. I mean, two expert coaches bringing just great patterns and some diversity of patterns. I love the coming off the bottom of Lulu. I really do. I like Greg's choice of credit spread on Fedex, XLB. My favorite pick of the night was Signet. See, we pull up that chart again just so I can see. That's my favorite pick of the night. And that was completely off my radar. And I love that. I love multi-year consolidation, that month-long consolidation. That thing's beautiful. I am going to give it to Tyler tonight. I am going to give the victory to Tyler tonight. He spoke to my cyclical heart. He gave me 5 cyclical picks. He gave me a bank. He gave me an energy. He gave me 2 semiconductors and a retail. I just liked him. I love Target. Target's probably my second favorite. I think that's really, really pretty. So, but listen, these two coaches are at Tackle Trading every day almost, and every week, producing content and blogs and teaching classes. Tomorrow morning, Tyler's going to be on the Trading Lounge. Tomorrow night, Greg's going to be teaching Tackle 25, our covered call class. And I'm going to probably tap you to do Cash Flow Club tomorrow night too, Greg, if you're open for that as well.
Whatever you need, man.
I feel like I'm loafing in greatness, like doing a lot of the administrative stuff at Tackle Trading. This was amazing tonight. We're all really the winners here, but if you want to see this kind of stuff day in, day out, come to Tackle Trading, come be part of our community. We'll teach you how to trade and give you as much guidance as we can along the way. Tyler, as the winner tonight, give me your final thoughts.
Hey, it's good to be back on top. It's been a bit. It's been a bit. I will be gracious in my reign, and I hope to be here a long time.
Everyone, we love our community. Come be part. And even if you're not part of the pro community, we love you checking us out. Seriously, do great in trading. It can lead you to financial success. I honestly believe that. Have a wonderful night, and we'll catch you next week. Take care, everyone.